In today's video, we're talking about a company which I think has a massive potential. We're talking about ANET. ANET, that's the ticker. It's called Arista. Arista is dominating the high-speed data center switch market. They've taken Cisco's lunch forever, and they continue to do so. They have a strong momentum. Now at 50 billion market cap, they're a behemoth. They have clients all over the place. Microsoft, Amazon, Meta, all of them work for them. Their revenue growth is absolutely insane. 2.3 billion, then 3 billion, then 4.3 billion. Last year, they did 5 billion in sales, almost 5 billion in sales. They're the market leader in the data center switch category. And they're also at the forefront of the AI applications of data centers. And with the increased spending that we're going to see on cloud computing and data centers and AI-driven spending that's going to happen in this field, this company is going to benefit. Now, obviously, there's macro risks here. If the economy goes kaboom and into the toilet, they'll suffer, but the rest of the market as well. But I'm just saying to you, look, there's big TAM here, total addressable market. This company has terrific fundamentals, very similar to NVIDIA, and it has similar exposures and similar opportunities. It's not exactly identical to NVIDIA. They're not competing with NVIDIA. In fact, I would call this a completing product. If NVIDIA does well, and if this industry goes into the stratosphere, Arista is going to benefit. But first of all, let me actually show you the numbers. Okay, so as you can see, we're right here on Stock MVP. You can get it at stock-mvp.com. Try it out. So Stock MVP shows us that we have short interest of 2.6%. That is not very high. Low short interest. Now, the PE is 31. It's not cheap, but compared to NVIDIA, 31 is sounding really, really cute right now, especially with the numbers you're about to see. So it's not a cheap company, but it's definitely not parabolic. Now, you can see that the stock also did quite well. Over the past 30 months, it's like down 5%. But if you go to a 1 month mode, you're going to see it's up 5%. 1 year mode, 64%. So depend how you spend this. If I go back 1 year, this thing was trading at 100. Now, a year later, it's at 150. It had a big spike, but nothing that comes close to NVIDIA, Palantir, and the rest of these stocks that went absolutely apeshit wild because of this AI thing. Now, look, here's the thing. Look at the cars right here. Let me just show you the fundamentals here. Now, we already talked about the fact that they have AI exposure, data center exposure. They're a market leader. They're working with the best clients, and they will benefit from AI-driven spending on data centers. And look at the revenue, 5 billion revenue. Look at the growth, 50% growth in a year. They did 1.8 billion just 5 years ago. They're currently at 5. Look at the margin here. Operating income is 1.7 billion. Net income is 1.5 billion. Look at the numbers, up 200% of 5 years. The net income was just 500 million 5 years ago. Now they've tripled that in just 5 years. Now, that's the one part I also like here. The debt is 55 million. The cash is 1 billion. So it's literally, it kind of reminds me of Palantir Tesla. High cash, virtually no debt. Operating margin is 35%. Look at this is incredible. Total assets, 7.5 billion. Total liabilities on this company is about 2.2 billion. So almost 3.5 times assets to liabilities. Excuse my math here. And, everything here checks out. Now, 31 PE, again, 31 PE isn't cheap, but at these fundamentals, with the opportunity it has and the similarity it has very, very, very interesting path, I think. Now, if we go to a DCF valuation here and we actually run it through the model here, so the company is guiding towards a 30% EBITDA growth. For our model, we're going to crunch in 25. I think it might be a little bit, it's safe to be a little bit under the guidance. 10% for capex and depreciation, that's fine. Discount rate, I think we can use 10% given the fact that interest rates are expected to come down in the next 5 years. So 10% would be reasonable. And that's our valuation. By the way, that's how fast it takes to do a DCF model in Stock MVP. It literally takes a minute. That's why I love the software. So currently our DCF valuation is $209. So as you can see, this company has all the right pieces in place. The fundamentals are off the charts. The margins are great. The guidance is great. The company is growing. And it has the right exposure to data centers and AI to benefit from this spike. And it's not competing with NVIDIA. In fact, if NVIDIA does well, which I think it will, this company will also do well. They have clients as Microsoft, Amazon. We just talked about it. Massive clients, 50 billion market cap. Now, all we have to do with this company is DCA into it slowly. I don't say rush into it. My system isn't to buy it up and now just pull everything into it slowly, dollar cost average over a couple of years, build your position slowly. If you want to learn more about how to slowly build your positions, how to do it without the hype, without the FOMO, without the anxiety. What's the right way to invest so you can actually reap the rewards when it happens? Head on over to our Patreon, patreon.com/Tom Nash. I have a $5 subscription, which I suggest you try it out. It has a 30-day money-back guarantee. If you don't like it for 30 days, I'm just going to refund you, so there's no risk for you. Try it out. Tell me what you think. And of course, a huge shout out to Aura for sponsoring this video. The link is below. Get rid of these data brokers that are having your information and exploiting it. Take care of this once and for all. Thank me later. Thank you, Aura. See you in the next video.